So why are cash contribution rules important to consider when choosing which life insurance policy you actually want to go with, or which life insurance company you actually want to go with? So let's consider right now PUA flexibility. In other words, how an insurance company allows you to put money into your policy in the form of cash. So let's say that we have two different companies here. So on this side, we have a company that's offering, let's just say, a 6% dividend. On this hand, we have another company that is offering a 5% dividend. Now, at first glance, we may say, okay, I'm going to go with the one that's offering the 6% total gross dividend rate versus the one that's 5 because it's just less. Well, let's first consider why that may not be the best approach on how to pick a life insurance company. First of all, what are the guarantees of both of these companies? Well, are they both offering the same guaranteed value? Let's say they are, 4%. So even though this is at 4%, so the actual dividend is at 2%, and this one is again at 4%, and the actual dividend is 1%, those dividends of 2% and 1% can change on a yearly basis. Take a look at the history of them. How have they performed? Oftentimes you will see a bit of a horse race effect, where one is a little bit better than another in one year, and then the other one surpasses them in the other year. That's why it is important to look at the cash contribution rules, or PUA flexibility. So we work actually with two different companies now that are very similar to this. One is currently offering a higher total dividend or gross dividend, and the other one is offering a slightly lower gross dividend. So this is how a lot of clients choose which company to work with, PUA flexibility. With this company, even though they are offering a lower dividend, their PUA flexibility is way more flexible. In that, let's say, for example, you have $10,000 that you want to put into your policy per year. So what would the minimum be? Well, 10/90 split. 10% or $1,000 is what you're committed to. The other 85 to 90% is going towards cash value. So this company allows you to pay just the minimums of that base premium and the term rider cost, and everything else up to the $10,000 you can put into your policy at your discretion and your leisure throughout the year without underwriting. You can do this through your online account. Now, this company that is offering the higher gross dividend rate also allows you to pay just the base premium and maybe if there's a term rider cost, but what they want is for you to add the entire $10,000 when the policy goes in force and every year on your policy anniversary date as well. So let's say you could only put in $5,000 and 2 months later you said, okay, I have the additional $5,000 that I want to put into my policy that adds up to the $10,000 MEC limit. I can do so, right? Well, this company will say no. Because you want to put unscheduled PUAs into your policy at a time other than the policy anniversary date, we are actually going to require underwriting from you. Those are the main differences, or the main big difference between these two companies. One, you can put in PUAs at a unscheduled time without underwriting. The other one requires underwriting for any unscheduled PUA payments outside of the policy anniversary date. So just to summarize everything, when you are choosing a life insurance company to work with, what are some things to consider? Well, obviously, the historical track record, their financial strength, the agency that they are working with, the actual agent that is helping to structure that policy. But one of the really big key things to keep in mind is PUA flexibility. Since dividends do fluctuate throughout the years, PUA flexibility, rules and regulations do not change. Hopefully this helped. Remember, When you are having your life insurance policy structured, ask the agent, what are the PUA flexibility rules between these companies? When can I dump money into my policy? Are there any ramifications if I do so at a time other than my policy anniversary date? You can get straight to the point, and that will really help to refine the decision-making process. Remember to like, subscribe, leave your comments below. Hey, if other agents want to chime in as well, feel free to leave your comments below. Brandon here saying stay healthy and stay wealthy. Thank you so much for watching. If you like this video, make sure to like, subscribe, and comment below. If you would like more information, visit us on the web at infinitewealthengine.com or click on the link to receive your free PDF on how to build your own infinite wealth engine using the infinite banking concept. We look forward to talking with you soon. Brandon here saying stay healthy and stay wealthy.